Test. All right, I believe we're good to go. Okay. Let me downscale that. All right, welcome everybody. Today's May 12th, 2025. It's been an incredibly active week since we kind of last hopped on over the last 7 days, right? We were talking about what is that ETH catalyst going to be, and then we found it. It kind of came out of nowhere, but the market priced up over 40% in a couple days. Bitcoin obviously also has seen some gains as well. And then over the weekend, we sort of peaked out. Last night, we actually hit some new highs in Ethereum, and then we've found our way a little bit lower through the regular session here in the U.S. So let me start it off. So each week we hop on here, and who's we? We is DARMA Capital Trading. My name is Spencer Riegle. I am the chief crypto strategist and trader here at DARMA Capital Trading. You can find me on X at _RIEGLE, or you can find me on LinkedIn at Spencer Riegle, so just my name. We hop on each week to talk about market outlooks, right? And so predominantly we are involved in Bitcoin and Ethereum markets. However, we do cover cross asset, but we are actively very involved within those specific markets, right? And so we always talk about kind of the outlook for the week on those. And we always take a top-down approach, right? And we'll get into that. But before we get into that, let's go through the disclosures. Disclosure is all information and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors, right? And so each week we like to talk about risk capital to start the week, right? So our job as traders is to be risk managers. That comes in two forms. One is taking opportunity, and then the other is hedging or protecting against foreseeable risks in the future, right? It's a fine balance. The most important of the two is keeping your seat at the table. So mitigation of risk is always what we start out the week talking about. We deem risk capital to be capital in which you're willing to lose, right? The game that in which we all are involved in here is risk, right? And so if risk and if your trading account, if your bankroll is going to impact your life or impact decisions in terms of getting groceries at the end of the week or paying bills at the end of the month, that's not what we see to be risk capital. That capital is better used for those necessities in your life, right? It even scales up to quality of life, right? If it's going to impact your gym membership, it's going to impact maybe a dinner that you take your partner or significant other out on. That's not risk capital, right? That will directly impact your psychology in the trade, and it's just not worth it. So we start off each week talking about that first, and risk capital is any capital in which you're willing to lose, right? To put at risk. So with that kind of covered, we always go through some house cleaning, right? And so we launched a little bit over a couple months ago. We launched our website. We're really excited about it. And so each week we come in and we talk about new things in which that we've kind of shipped out as a team and posted on the site. So this week we have some cool things. We talked about the price map and the playbook. We talked about the trade vision, right? So these are some blog posts that we're going to get up there and talk about. I owe you guys a blog post. I will get it up there as soon as markets stop going up 40% in a week, and I get some downtime. We have our integrations, anything in which we do. We have contact forms, all of that. What I would like to talk on this week is we are expanding and looking to kind of grow the Discord in which we have here in Bookmap, right? And so for the time being, we are offering 5 spots at a 50% discount for all annual subscriptions to our data and analytics, right? And so that's only going to be here in Bookmap for now, right? And we're only opening up 5 spots, right? And so it's basically a first come, first serve. If you are interested in that, it's not listed on our website. So either get in contact with me via the Discord or external areas, right? Part of that process is going to make sure that you're verified here in Discord, right? We are putting a lot of effort into trying to grow it. So it's awesome to be able to talk with people and about kind of everything in which we're doing. So stop by, ask us questions, and then we'll get you set up. So for those that are kind of new to the stream, normally we approach markets in a top-down approach, right? And so we kind of talk about the macro, and then we talk about some of the more shorter durations, right? So that's a 30-day basis, that's a 7-day basis. And then we really get into the micro, and that is in terms of Bookmap, right? And so where's that resting liquidity sitting in the book? And where does it align with some of our data and analytics to better get a depiction of what's going on? Where are those real buyers and real sellers in the market, right? To add signal acceptance to what our outlooks are, right? So let's start with macro. Let's start at the top here. So obviously, in all historical measures, Ethereum has made quite a significant move to the upside, right? So the stats and data suggest that a stalling would be normal. However, they're just stats, they're just data, right? And so while they help us understand a foundation and they give us guidance within risk taking and risk mitigation, right? Going all in long on a 40% move in 2 days, 3 days, just doesn't make a lot of sense. Well, that's super helpful within trading. We always need to understand that anything in the past does not always have to happen in the future, right? There's nothing that stops price from going to infinity outside of the fact that there's a normal rationing process within price distributions higher, right? So with that being said, take it with a grain of salt that we potentially could be in a new data set, right? However, note that a digestive trade throughout this week to lower statistically and historically falls in line, right? With that, let's talk about some other catalysts. So obviously the Pectra upgrade went through. There was positive news. You had the UK trade deal go through last week. And then there was rumors, obviously, about negotiations with China coming through over the weekend. And those were to be sat down and negotiated and talked with over in Switzerland, right? And that happened. That came and gone. Right, and we got the pricing up into the weekend. We saw bids Saturday even in Ethereum, right? It was fairly active Saturday. And not only that, we saw a continued supporting of the bid throughout the regular session, right? Or throughout the open last night. Now, the moment that the headlines came out, the market didn't continue higher, right? And so what I'd like to talk about a little bit today is a little bit of theory, a little bit of application, and a little bit of a lot of bit about application when we're talking about data, when we're talking about analytics, when we're talking about normalities, when we're talking about just probabilities, all these kind of things. The human discretion is a massive edge in which we discount, right? Oftentimes we go to quantitative models, we go to all of these historical norms, and while as a foundation it is incredibly powerful to lean on, there is still a human component that is powerful, right? And so coming into the desk this morning, you're seeing headlines of China negotiations, US negotiations, right? They're happening and they're progressing, right? And there's positive news coming out of Besant, right? But the market's not going higher, right? And that was the first tell that, hey, something's not performing to expectation here, right? That's all we had to go on off the open. However, we can lean on some of the data and we can lean on some of the analytics and also understand that Ethereum pricing up over 40% in 3 days. Statistically, its momentum is likely going to slow. A lack of continuation in price on a positive headline in which the market has been waiting for is not positive. So discretionarily, right, that's where you can start looking to sell the rumor, right, or sell the news, apologies. Buy the rumor, sell the news, right? So I'd like to talk about some of those today as we kind of take a look at the outlook for the week. So macro for the rest of the week, right? Obviously, the biggest thing here is price. On all standards, Petra went through, it went well, right? We priced up on a positive trade news last week. This week, it looks like China negotiations are objective, but there's no resolution, for one. And for two, it seems as if time is still in the cards. And so the gamma risk that's in the market, meaning all of a sudden you have a 43% move, you get your implied vols in Ethereum to price up quite significantly. You get your skew to also lean to the call side, especially dated in the short term. You get your vol term to be backwardated. Vol term basically just tells you that the at-the-money vols are going to be significantly higher than your dated implied vols. That is dictating that the market is pricing in higher, and the fact that we can't go higher on what's supposed to be a positive catalyst is important, right? And so that is something in which I'd like to talk about as the largest and the most important macro event as we kind of head into the remainder of this week, right? So let's kind of hop into the weekly outlook. Let's take a look at price. This week, a lot of times we talk about theory and we talk about kind of just price levels. This week we're going to talk a little bit more about application, a little bit more about strategy. The reason for that is there's some good alignment across the board in which if we don't get a continuation, that's important, right? So let me pull up here. Let me close down the spot books just so we can get a cleaner data feed going here. What you are looking at on the right, for those that are unfamiliar, is Bookmap, and then on your left is Price Map, right? So Price Map is our quantitative and qualitative data, right? That is what we were talking about as the discount for those that are active here in the Discord early on the session. But let's talk about the outlook, right? And so applying the macro outlook, right? China news was positive, it was objective, but at its current state, it looks as if it was already priced in, right? So we need to look forward. Okay, what are those positive catalysts? And I'm basically going to walk you through kind of my process and how I go about this, right? So let's type in here. Forex Factory is just a really cool free calendar to kind of show you some of the big events that are happening, right? And so let me blow it up a bit so it's seen on YouTube. So you can see that we have the CPI tomorrow, right? In the US, that's going to be an important catalyst, right? Outside of that, May 14, not really anything. Thursday, we have PPI, right? And then we have U of M prelim consumer sentiment on Friday, right? And you can see the importance with the red flags, right? And it shows you across the globe. You can filter it out. I always just kind of take a look over and to try to understand what could be that next catalyst out of the economic numbers, right? So knowing that we have some data in the morning, right? A base here at the weekly directional, so is positive, right? 102, 108, that's where we start the week, right? It's always where we start the week. The directional gives us that directional bias on price specifically, right? We've often talked about that sentiment bias, right? And because the green level is below the directional, that means we have a positive sentiment bias on the week. However, because it's so far off the directional, a play lower is still supportive in a sentiment perspective, right? Just means look for a lower area to buy the dip, right? And so here and now, over the next 24 hours, what's the most important figure to look at here in Bitcoin? It's that weekly directional. 102, 108 and a half is that over under number. As long as we're over it, we have an opportunity to extend. What could we extend on? PPI, right? What could we extend on? CPI. What could we extend on? That consumer sentiment on Friday as well, right? Those are all economic events that we can extend on. Outside of that, any industry-related positive catalyst we can also extend on. Any further resolution out of trade we can extend on. It seems unlikely at this present time. It seems as if that was already priced into the market and we need to wait for further negotiations to happen between the US and China. So the next piece is just looking at some of that economic and then looking across the board for positive industry catalyst, right? So the fact 102, 108 and a half opens the door for that extension higher. The extension higher has to base over 105, 195, right? Otherwise, it's positive, it's constructive, but it's digestive. And because the previous week's high and the previous week's close are so tight, a normal trade after a rejection here targets the previous week's mid, and that previous week's mid is 98,800, right? So as long as we can stay over 102, 108, we remain in this digestive choppy until we can base over 105, 195. Because we rejected here on positive news, I'd like to take a look at the lower levels this week. And we've been talking about some of those higher levels recently, but the market's not priced very well for lower, right? And the reason for that is implied vols in Bitcoin are very cheap. So the market's basically pricing in a tight range, right? And so while 102 to 104, it's basically nothing in Bitcoin terms for a 7-day process. However, we still need to talk about the line in the sand. So 102, 108 and a half, over it's positive and digestive. Over 105, 195, targets 108, 281 and a half, right? And then you can take a stab at those all-time highs. That obviously is right in alignment with your all-time highs. A rejection there is normal, right? More than likely, if we really take a stab at the 108 and a quarter, basing over it, we're going to target 113,651, right? That's your upside kind of targets for the week. However, because we rejected last night on positive news, I am a bit cautious about the follow through here in the market here and now, right? And so where do we look on the downside? We need to open it up, right? Downside, rejecting the previous week's high and previous week's close immediately targets previous week's mid, right around 99,000, right? If we can't hold 99,000, right? It's basically 100 down to 99. Where are we going to target? 97.5. 97.5 has the potential to be a good low for the week, but there's better alignment down at 97 to 96, right? This is previous month's high. A nice flush on the week after you get everybody bulled up is not out of the picture, right? How does that play out and what to look for when you're looking at kind of the downside events? Here now, if we're under 102, 108 and a half, that's your target to say that this market can go lower. If we're over it, just get rid of the idea, right? There's about, 7 points, 8 points of risk right now. We could trade around it for a bit and be choppy, right? But if we're under it, that opens the door. Where are we going to target? That 99 to 100 is a pretty good target here, right? If we can't hold the 99, that's your what if we head lower here, right? If we can't hold 99, it's 97.5 down to 96. Those are good lows for the trend to remain intact and kind of stay in this choppy digestive higher range that we've been in this month, right? If the market breaks under and holds under 96, it's not positive because obviously that opens the door up to a full reversal of this down to 92,172.5, right? And a target of that previous week's low. So full upside range, full downside range. One thing to note is the implied volatility market is not pricing in anything really. And let me see if I can pull this up. So earlier this morning, I just pulled some of the straddles, right, based on Deribit's pricing. So we're a bit off in terms of pricing right now. But you were looking at, for the week, we were looking at 516 duration. At the monies, we're pricing in a 3.14% straddle. So it's a very tight range that the implied volatility market is pricing in. So the market's not pricing in really an expansion out of the weekly CR minus to this weekly CR plus. So taking a look at Bookmap, right? So we talked about the upside kind of expansions. We talked about the downside expansions. And then we talked about what the market currently is pricing in terms of the option straddles. The book is light, right? And so we're looking at the multi-book, right? The perp multi-book on Bitcoin. In terms of buyers, down at 100, there's around 200 coins sitting there. It's not significant, right? All the way at 104, there's 120 coins sitting there. Also not very significant. So the book is light. There's not a lot of action. Nobody's really stepping in to want to pay up for volatility. It seems as if the market's complacent with selling it. Selling it at the moment. And even in some of the duration straddles, they're fairly cheap, right? The December 106s is your future price, 106.305. The 105 strike, which is the 1,000 points in the money, is pricing an $18,000 call, right? It's fairly cheap for those that are kind of expecting this all-time high, this continued rally all the way to 200,000, right? So the market's just not pricing it in. So Bitcoin seems to be a bit more quiet than Ethereum, but that is something to note. So that's kind of the weekly Bitcoin outlook. Let's take a look at Ethereum. Obviously, there is a lot more action in Ethereum right now. Implied market is priced up. And so in the front end, right, the daily option we were at earlier this morning, right around, let me see, I have it here, right around an 85% implied vol, which a bit over the weekend, and some of those zero DTEs were over 100. So the market has been incredibly active in pricing in that short end risk. Currently, here now, I'm pulling up Deribit as well. We are in the May 14s, right around 81. So down a bit, but not significantly. So volatility is still priced in the short term. And let's talk about how to apply that thinking as we look at kind of our outlook for the week. So again, we're looking at the weekly directional at 2433. You have to be a buyer into it, right? That's supportive of the market continuing higher. A rejection again off this previous week's close basically just opens up the door to this choppy upside range here. The implied market on a short-term duration is pricing in an expansion higher, right? If we don't get it, and this is kind of where the application process comes in, if we don't get it, expect the short end vol to come down slightly as it gets sold, and for the market to normalize, right? Currently, the implied vol term, the vol term is backwardated. You have those 81s short end, and then in the May 30s, you're looking at a 72, right? So there's a spread there that's interesting for those that are trading vol. But on a directional basis, what dictates the linear move is done? A held trade under 24.33, right? As long as we hold this, the market can extend. Where does it extend? We have to base over last night's highs, right? Which is just logical, right? Previous week's close, previous week's high, we have to base over it. Where does it extend to? 27.5847 is in play, and that upper extension targets 30.15, right? That would be a very large move historically on a monthly basis. Again, historically, statistically, the edge is to that this move's digest. Historically, statistically, doesn't matter until 24.33 doesn't hold, right? Then you can start to lean on that data and say, look, that thesis, that data set makes sense, and this risk now makes sense, right? So here and now, 24.33 continues to be supportive of the bid. Under it, opens the door lower. Where do we target, right? 23.3877 is that initial stop. Down to 22.44.54 would be a normal move lower on the week, right? Again, you have that green level under the directional. The sentiment is look for lower levels to buy if you look for breaks to buy. The closer you can get to 18.59, the better. However, a break of previous week's close, previous week's high, targets previous week's mid. Where would that be? 21.50, right? Or 21.65, apologies. That would be normal. We expanded 43% in 3 days, right? A breakdown of part of that. For those that bought at 2,600, yes, it would feel absolutely extreme. But that would be a normal digestion, right? Down here, base here, bounce back, right? The market's priced up, implied vol on a 30-day basis. We are in a historical period in time of the month where volatility picks up, right? So expect larger ranges. Expect that as long as 24.33 can hold, the upside is still in play, and this continuation linear momentum is still in play. Under 24.33, a held trade there is positive, right? I mean, it's much better than where we came from, 1,800 3 days ago, or 7 days ago, apology. But it's more digestive, right? And so that's kind of the outlook here in Ethereum. If this market really wants to break down, those downside targets are 1987, 5.8, all the way down to the sentiment level here at 1859. The expectation is that this would present a bottom to buy, and this is where risk capital for the week would be best deployed. So let's take a look at Bookmap here, and we do have some resting liquidity in the book, right? So as we kind of just talked about, a breakdown held under 24.33. A normal low would be from 22.50 down to this previous week's mid, right? That basically is a 100-point range for Ethereum. That would be constructive, right? We have a resting liquidity band here at 22.50 on the dot. That brings more validity to this level. Take a look at it. The longer it can hold, the longer it suggests that that's a real buyer sitting here willing to buy, right? Outside of that, there's resting liquidity basically across the whole book. However, it's not significant enough to show up that we're seeing here. 25.50, 26.50, and 28.30. Those are your upside levels. 25.50, again, would be right in front running of this previous week's close, basically where we just broke, right? So somebody's looking at that, suggesting that they're looking to bail out of some of their risk there. 26.50, we don't have alignment there, but we do have alignment at 27.50. So if we get a base over 25.50 or 25.95, our expectation is 27.50, and basically up to 2800 is a level to look at for potential rejection back down. That would be your resting liquidity up here, right? If they can't get through that, they trade through here and then reject. That's what we consider to be a sell UP reversal basis. The weekly, that's positive but digestive. It targets on a good market 25.95. On a full round trip of the UP would be a breakout here over a fake out back down to 24.33. So there's a lot of scenarios, obviously, for the week with Ethereum. The reason for that is volatility is here. The market's pricing in implied vol across the full term, right? Especially in the short end. Next 72 hours, basically 0 to DTE all the way out to 3-day options are pricing in volatility. 30 days are pricing in higher vol, right? So that's what we're looking at. 24.33 is the most important figure of the week. Next is going to be that previous week's high. That kind of dictates the narrative for the week. And then you can really lean on this liquidity that's resting here in Bookmap. Right? So that's the weekly outlook. Like to keep it open for questions on the week, as I'm sure there may be a few, and if there's not, then we can close it down. But I will be in the Discord. Discord's actually been picking up some steam, which is exciting. I really enjoy and hopping in here and talking when I get the opportunity to step off the desk, and I am on the desk quite frequently as of late. So markets are active, markets are super interesting, and there is a lot to do. Hey Malik, great to have you on the stream as well. So we'll give it about a minute. If there's any questions, feel free to drop them in the Discord. If not, I'll be around in the Discord. If you're watching the recording on this on YouTube, make sure to stop by the Discord and take a look at that. That offering in which we're giving out. So I see Steven typing. It's been a while, Steven. Hope you are well. Steven said, "What's the day like for you when you are on the desk?" So I'm here in Chicago, so I had the opportunity to go speak at the University Illinois Chicago, and I got asked the same question, and the answer in which I gave was, in the realm of crypto, there really are no days. Time just kind of exists, right? And so we see time obviously in segments, and we've kind of talked about that a bit in the past, and we talked a little bit about it here in the Discord. But obviously with markets this active, we are 24/7. That's kind of the appeal to the crypto market. It never really shuts down, and when volatility is there, it's there, and I'm on the desk. So absolutely, I am monitoring risk and monitoring everything over, all different time zones. So a day in the life of being on the desk is continuous time. There is no day. It just exists. So it says, are you always active or not really? It's more about positioning. So I think about markets in terms of positioning, and I think about risk in terms of positioning. I am more in the volatility space, right? So it's options and understanding kind of those distributions, right? And so last week obviously was incredibly interesting because it's an outlier event. So yes, absolutely, in 3 days we've seen Ethereum go up 40%. We've seen it go up more, right? Especially early on in its existence. As price kind of goes higher, market caps are higher. It does take a little bit more capital to push a market than it did previously, right? If there's a $1 market cap, there's a little bit of different theories here, so I'm not going to speak explicitly here, but yeah, price going higher does ration the speed in which price can go further, right? But I think about it in the full price as a price distribution, right? So where is the probability of price going? And then as we cross through price, where's the implied market? What is the vol market really pricing in? And do I think that we can exceed those areas? So yeah, I mean, I guess to a long-winded kind of answer, but to answer your question, I think about price in terms of price distribution, 50 delta all the way out to a 5 delta, right? And that's both sides of the trade. That's right tail, that's left tail. There's a skew in there. And then there's what the market's pricing in versus kind of what the price map's pricing in, right? And then you kind of correlate it all. So sometimes super active and then less, and sometimes not as active. Depends on kind of the violent nature of trade. So Melik said, if I have questions intraday, what would you say is the best time window for you to respond to questions? I am not going to commit to an exact time. I mean, I am on the desk pretty much all day, every day for the most part. I do, when it is a bit quiet, I do tend to step off during the weekends. I like to try to get a Saturday in here and there if I can. And but I will always circle back whenever I have the opportunity, right? So even if I don't get to you that day, I'll come back and I'll answer your questions for you. Yep, no problem. All right. I see some typing, so we'll let it play out. So we had some good daily levels as well. I know we've talked on the past about the confluence of different time frames in which we use. So a breakdown today on the daily was super interesting because that base was right at that sentiment level. So the expectation was the market was going to remain bid, right? Even if it broke down, this would be where that risk capital would be best used. And it almost held it to the tick today. So it would have been great to get a little bit more in this area, but anything on the green is basically variance around that figure and that expectation. So that was interesting. Ethereum's been, which is super interesting because it's lagged for quite some time, but Ethereum's been stronger, and so they're relatively correlated. So we didn't get the full breakdown in which we saw in Bitcoin, which was to be expected as well. So a lot of application, a lot of discretion today that we don't typically talk about, but I wanted to bring in a bit more of outside of just theory, right, this week, as these markets are really great for talking on. So cool. Yeah, no problem, Steven. Yeah, so if anybody has any questions, feel free to stick around and ask them in the Discord. I'll be here, so I can get those answered for you. I can just do it in the chat. Otherwise, enjoy the week and good luck. So